Welcome back to the Professional Services Practice webinar series. We'll be covering vendor performance benchmark review and outlook today, highlighting the results from our recent Professional Services IT benchmark. My name is Allison Crawford, and I'll be your host for today's session. Over the past few quarters, we've engaged with our readers to bring a deeper clarity into the state of the professional services market. This quarter, we're taking a slightly different approach to our webcast and be delving into the business process outsourcing market and how client demand and vendor response are evolving this market. Before I pass this over to Bryan and Ramunas, there are a few logistics that I'd like to cover. First, we're recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others we posted. Second, we'd like to hear your thoughts and comments on the materials we're presenting. Please send us any questions or comments through the Q&A or chat function. Bryan or Ramunas will address them at the end of the presentation. Or, if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to Bryan or Ramunas at the end of the webinar to set up that conversation. Third, we're going to send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I'll be sharing all these social media links with you at the end of the presentation. With that, let me introduce Analyst Bryan Belanger and Senior Analyst Ramunas Svarcas from the Professional Services team here at TBR. Bryan is the primary author of the Professional Services Benchmark, which we'll cover today, and Ramunas has been covering the services market for over 15 years. With their inputs, the Professional Services team here has guided countless clients to improve margins and understand new global opportunities to expand their reach. And with that, let me hand this over to Bryan and Ramunas.
Thank you, Allison. This is Ramunas Svarcas. I'm one of the senior analysts here at TBR, and I want to wish everybody a good morning, good afternoon, and good evening. Before we get started on our presentation, just wanted to briefly cover what our IT services benchmark is for those that may not be familiar with it. TBR, in their IT services benchmark, examines 35 large companies in the IT services space. Those companies, when you aggregate their total IT services revenues, account for nearly half of the overall IT services spend on an annual basis. So they certainly are the representative companies, the companies that lead the market and really determine where everything is going. For today's presentation, we will be looking specifically at the business process outsourcing arena, in part because we're seeing it growing quite significantly. We're going to examine not only why it's growing and what's happening, but what the vendors are doing in regards to that growth and how they're actually managing that growth and helping generate revenues from BPO. And then finally, one of the key areas that we think is really driving success on the customer side and really creating the demand in the marketplace. So with that, I'm going to turn over the content to Bryan. Take it away.
Thank you, Ramunas, and thanks everyone for joining us. So just to dive a little deeper into what Ramunas was talking about, we'll start with an assessment of where BPO is today, and we really see it as being an operational imperative and really a shift in mindset from why should we invest in BPO to why shouldn't we, and that's due to how BPO is holding up well in terms of the values of cost and efficiency. We'll assess how BPO is continuing to evolve due to customer preference from a pure operational focus to a strategic focus, and how that's largely driven by vendor acquisition strategy. And lastly, we'll assess, as Ramunas mentioned, how analytics is really the core engine driving this evolution in BPO. So we'll start really with where is the market today, where's the BPO market today, and what does it mean to me, and where can I receive gains in the near term? So that's where we'll get started. So to just quickly set the stage with some aggregate statistics from our benchmark, if we look at a total TTM, or trailing 12-month view, BPO revenue for the 30 firms we cover in the benchmark grew 5% year to year in the first quarter of 2013. And that's outpacing all other service lines we cover, and actually all service lines face contraction except for applications outsourcing. And we believe there's really multiple factors at play that continue to drive this BPO performance. And initially it's that BPO has done very well in delivering what it's supposed to, delivering cost takeout and delivering operational efficiency gains. And as I said, no reason really to not invest in BPO to achieve those efficiencies. As we'll discuss further, we see continued progression by smaller firms that are building share in the industry through investments and acquisitions, principally the India-centric firms. And lastly, with our discussion of analytics, we'll talk about next-generation BPO and how not only analytics, but investments in specific verticals and a shift in BPO to a closer and tighter alignment with technology and shifting to platforms. Adoption of these next-generation solutions is also starting to drive growth in BPO. So just to provide a slightly different view of growth, just wanted to mention here, we're showing growth in the service lines we cover in the benchmark year to year for 1Q12 and 1Q13 on an average TTM basis. The data I showed on the previous slide was a total TTM basis or a weighted average. So certainly that total weighted average growth for BPO is lower than the 8.4% we show here because of the impact of a number of large firms that are growing at a much smaller clip than some of the smaller, faster-growing firms. But at any rate, the story here is the same, and BPO is performing comparatively well, and while it's decelerating at a much slower pace than industries such as consulting and systems integration, which has certainly fell off a cliff due to headwinds in discretionary spending, or ITO, which is happening due to commoditization. And so what does it mean? It means BPO is performing better because it aligns with near-term needs, and for this reason, it is not falling off in terms of the deceleration we see in the overall professional services space. And just to blow that out to a slightly longer view, because certainly the near-term growth in 1Q13 is an issue, but this is a continuation of trends that we discussed in our 2Q12 webinar, and we continue to see in tracking the BPO industry. So this graph here that we're looking at shows TDM year-to-year revenue growth for BPO for the benchmark versus the other four core service lines we cover. And the key takeaway here is highlighted in green. BPO is displaying more resiliency than the other service lines due to the fundamentals associated with investing in BPO services. It's a reliable means of reducing costs and shifting resource to enable the IT or the business organization to focus more on internal goals rather than back office processes. So just to dive one level deeper into the TBR traditional way we look at this market, which is really a bottoms-up vendor view of what's happening in BPO, and not only what does it mean when I say total BPO is growing or total average BPO is growing above CNSI, but who are the vendors that keep me up at night, and who do I have to worry about, and who are the laggards? And as we see here, and as we'll dive into a little further, it's the India-centric firms that continue to aggressively build share in this space. They accounted for 6 of the top 10 spots in TTM BPO revenue growth in the past quarter. We see CGI sort of on the bleeding edge there. That's largely an acquisition in the bolt-on of revenue streams from Logica, but key takeaway is that the India-centric firms, despite their small revenue scale, which is what the bubbles presented here represent, continue to build share through a combination of M&A and the fundamentals of their delivery models and portfolios and how that aligns well to the BPO market.
I also wanted to kind of interject very quickly. We generate this kind of chart for every one of the services lines, and understandably we look at all the services lines, including service and support for a number of people that are hardware-centric and that they provide those services. And what's interesting to note is that basically over the last several years, BPO has been basically accounting for 11 to 12% of the total services market for the various vendors we're looking at. That has now actually crept into the 13% range. It's going to probably surpass the support and services revenues that the various hardware-centric players are generating out from their businesses. So it's definitely an up-and-coming area, and we believe that the traction is going to continue at the pace that it has been changing over the last several years.
And so we want to highlight TCS because along with the remainder of its India-centric group, it's really a group of firms that is driving that progression in BPO, as Ramunas talked about. And TCS is really an interesting case. So when I say India-centric vendors, it can kind of get lost in, well, they're all growing at the same rate. But TCS we wanted to highlight because it's one of the larger India-centric vendors in BPO, and it's continuing to grow at a near industry-leading clip, which is reflected in the graph we have here. So what this graph shows is TCS's TTM BPO revenue and growth versus the remainder of the BPO benchmark universe we cover. And really what's happening with TCS, what we can learn from TCS, is 4 key investment factors that are fueling this growth. One is the low-cost delivery, which is certainly not something that's differentiated from the remaining India-centric pack, but a reliable means of delivering cost savings. One that we want to highlight in more detail is TCS's aggressive investment in platforms and recognizing the low-cost opportunity of BPO, but also diversifying and expanding its portfolio to move up the stack and move into more value-added and technology-enabled BPO services. And then lastly, wanted to highlight, and we think this is where really the opportunity sits for these India-centric players, is the opportunity to capitalize on cross-sell and vendor churn. TCS can regularly mine its existing applications services base for opportunities to sell this BPO value proposition, and we believe that's a reliable and sustainable means of building share in BPO, as well as leveraging its low-cost value proposition to capture deals from some of the MNCs who may be taking their eyes off the BPO marketplace. So as we mentioned with TCS, one of the important growth levers is its investments in higher value BPO services, such as platforms and verticals. And we believe this is really a response to waves of change that are happening as BPO, due to customer demand, is evolving into more of a strategic imperative. And there's multiple investment strategies as we laid out with TCS, but we'll want to highlight specifically how acquisitions are driving this evolution. So we want to use a pretty simple, hopefully not overly simple analogy to assess where this market's going. And we want to look at BPO in terms of being sort of a perfect storm. And vendors are all out to sea in these boats, and they're trying to traverse rocky waves from an old shore, an old world of pure labor arbitrage and taking cost out of the business to this new island paradise of delivering business value through your BPO relationship and addressing business outcomes beyond cost. And so they're all in these different boats. Maybe some are little dinghies and someone's off in a cruise ship, but they all have different tools and capabilities that they're using to try and traverse these waves. And the waves I'm talking about here are changes in the industry due to whether it's customer preference or technology. And we believe mergers and acquisitions are really the kingship that's out ahead of everyone in helping to traverse these waves and avoid getting swallowed up. So this here is my attempt to bring art class to the world of BPO. I like to think I succeeded. I'll let you be the judge, but so what we're looking at here is really a simple depiction of that transition I'm talking about, which is vendors moving from the old model, which relied on labor arbitrage and the lift and shift of processes to take out cost, to a new model where business outcome enablement is really the focus. And as you see here, we highlight those waves of change we think are rocking the industry. As I mentioned, a focus on business outcomes or disruptive technologies such as analytics and cloud, changing the way that enterprises buy BPO services and where demand exists, or as I mentioned earlier, the continued integration of process and technology and BPO becoming more aligned with IT objectives, or as I mentioned, demand for domain expertise and value aligned to my industry. And as we see pretty clearly, M&A is the ship that's out ahead and helping bridge this gap and cross this sea. And so simply, there's really 3 areas we see where this M&A ship is taking hold. And one is domain expertise, as I mentioned, and that's focusing on acquiring providers with specific expertise and or technology assets in a high-growth industry. The example that comes to mind is Genpact, with the purchase of Jawwood in the healthcare space and building its capability to address business process transformation needs in healthcare. Global delivery, that was a hot topic during our last BPO presentation. So the MNCs continuing to build out that offshore base, either in nearshore or pure low-cost offshore markets. So as the India-centric vendors taking a different route, building up the local presence to really create that transformational value proposition in core markets such as the U.S. and Europe. And then lastly, where we'll drill down a little further is folding technology into the BPO portfolio and leveraging analytics and cloud-based platforms to continue taking cost out through the context of a BPO relationship, but also reach closer to delivering that value we're talking about. So an acquisition story we wanted to talk about is Xerox Services, and I feel like we beat the drum a lot about Xerox Services and BPO, but they're always worth mentioning because they're the largest BPO vendor we cover, and in particular, this acquisition story is a very interesting one. So the graph we're showing here very quickly is plotting Xerox's TTM BPO revenue growth versus the remaining BPO industry that we track for this benchmark. And with the exception of that spike that we see, which is the ACS acquisition, we see that Xerox has really trended close to the market despite being the largest vendor that we cover in terms of BPO revenue in the benchmark. I mean, we think this is largely a result of its ability to continuously transform and move up the stack to higher value BPO services through acquisition. We've mentioned some of these before, but a couple we wanted to highlight were WDS, which gets at that focus on analytics that I was talking about, and acquiring their Global Mind tool, which adds customer care analytics capabilities that can be integrated into call center services to better analyze how those interactions are taking place and where improvements can be generated. And then more recently, just this past month, acquiring Customer Value Group in the UK, which added a software as a service focusing on accounts receivable processing, which will help Xerox move the finance and accounting BPO services it offers to a more cloud-based technology platform. So a couple different stories of how Xerox is maintaining growth despite being one of the big monsters in BPO by continuously reinventing via acquisition.
So Bryan had mentioned, certainly Xerox's approach to looking at the BPO market and acquiring, and certainly within the last month here, we've had a number of acquisitions. Also, we're seeing this happening, though, across the board. I mean, firms are being acquired. The smaller firms are being gobbled up by the larger firms. Genpact, Bryan had mentioned, acquired Jawwood. Capita, again, in February of this year, acquired, Northgate Managed Services Limited. They were trying to expand their HR capabilities and provide business process outsourcing and accompany that and create more value for the client in terms of actually being able to, provide some additional consultative work, enable the change management programs, apply some software to the whole, picture. So it's an ongoing, evolving process. What we believe is going to happen is there are going to be continued consolidations, continued acquisitions, smaller firms who are going to be gobbled up by larger firms in order to keep pace with the marketplace and be able to serve the client's changing needs.
And one of those changing needs is really to bring analytics into the business process in a way that's going to deliver true business value and business insight beyond cost. And that's why we believe analytics is this engine of BPO's evolution to a strategic imperative, and we'll dive into it more. So I don't have a pretty picture here, like with the ships, but I can further the analogy to say that analytics is indeed the engine that's driving the ship as BPO vendors seek to transition from traversing that sea to the new model. And what I mean by that is analytics tools are really what creates the value and analytics expertise. So clients are recognizing that BPO generates vast volumes of data, and they're looking for vendors that can not only have the tools, but have the expertise as well as the business process model and use that analytics engine to deliver value and process that data generated during a BPO engagement and spool it up into actionable business insights. So this is our attempt not only at another pretty picture, but a way of sort of laying out the BPO industry as simply as we see it in the life cycle and how it's progressed and where it's going. So we're trying to plot three major phases of the industry as we see it on two core axes. One is the level of strategic focus, as we've been talking about, a continuum between pure lift and shift cost takeout and true innovation and business value. And then as we generally do and as we do focus for this benchmark, the opportunity that exists for vendor differentiation. We really want to know with each of these models where vendors can actually differentiate and where opportunity for true BPO growth exists. And so just quickly, the three models. BPO, as we see it, initially started as a pure lift and shift, so rebadging of employees, focusing on horizontal functions and purely taking cost out. Then it matured slightly to a model of offshore process optimization. So leveraging offshore delivery and nearshore delivery where possible, and really focusing on the harmonization and the standardization and automation of process and expanding this beyond pure functions such as finance and accounting and HR. And that led us to where we think we are today and where we think we'll be going in the near future, which is business process transformation. So not taking the eyes off those horizontal processes, but extending to verticals. An extreme focus on business outcome and measuring to that business outcome, using analytics as the driver, and then moving to a cloud platform to achieve those old world cost synergies wherever possible. So just a slightly different view. What we really see in this new world of business process transformation is a collision of the best of both worlds, the legacy old model and the emerging model. So in the legacy model, the focus on operations and process harmonization and cost takeout, it's not going away. It's being melded with these new needs, such as addressing a business problem or applying an analytics tool to a BPO data stream to process that and extract business insight, and focusing on an industry such as healthcare, as we mentioned with Genpact, and leveraging a blended delivery model to do so by pairing onshore local expertise with back-end business process offshore staff. And analytics is really the engine we see as underlying that and really catalyzing and creating the opportunity to deliver that value. So just wanted to highlight quickly a vendor we see as really embodying this business value partner proposition that we're talking about here. And having the analytics capability to do so, certainly, and that's IBM. And so quickly, the graphic we're looking at here is IBM's standard go-to-market approach, and it really leads with an industry, which is what we've been echoing throughout the presentation, an industry and an outcome, and defines an outcome with the client, and then IBM can pull through capabilities from across its services, hardware and software businesses, as well as its proprietary IP assets to deliver on that and develop an end-to-end solution. So it's not purely selling the latest and greatest analytics tool or big data processing capability or low-cost BPO HR service that can be delivered out of India. It's blending all those things into a transformational business process solution that is aligned to a desired outcome that can be measured. And a client reference that IBM harkens back to a lot in this regard is Banorte, and had the opportunity to hear a little bit firsthand about this deal and how it was structured, attending a recent IBM Big Data event in Toronto. And so Banorte is a Mexican bank, and they allied with IBM under really a 10-year, heavily outcome-focused transformational deal, where they're looking to completely innovate in the way they they communicate with customers, and how they integrate their operations, their business processes with IT to improve customer engagement and drive revenues. And that engagement is heavily priced based on outcomes and focused on harnessing big data and making sure that's harmonized with the integration of business process to deliver a solution that delivers true transformation. And then just also want to highlight sort of the next frontier as we see it in IBM's approach to this integrated business process transformation, and that's Watson Engagement Advisor. Recently announced, and that's a call center tool that leverages the Watson cognitive technology to really lay into the call center as either a customer care agent augmentation tool or a way of automating and replacing that function and delivering direct to customer business value by using cognitive learning to understand the customer and build up an understanding of the customer through analytics over time. So a deal and then a new offering that embodies this partnership approach we see evolving in the BPO market.
What's interesting here is that also, IBM is not the only vendor who's really pushing combining BPO and analytics. And the approaches are slightly different amongst the various vendors. But there are a number of vendors that have recognized that this is a key approach and are attempting to move in that direction. Accenture certainly comes to mind. Back last year, they actually conducted a BPO analytics study. And the study's title was Achieving High Performance in BPO. And what they found that the high performance companies that were succeeding with BPO really, on a factor of 2 to 1, indicated that analytics was a key component. So it's certainly the direction they were going in. Another company, a large IT services company that announced and launched the BPO analytics service was HP, again in the fourth quarter of last year. And what's interesting for both Accenture and HP is that not only are they providing the tools and the environment and the capabilities to do the analytics, but they're also willing to provide the skill sets to help in the understanding, analysis, and driving the results into actionable items, virtually becoming much closer related to their clients and active participants in leveraging the BPO information and taking it the next step forward.
And so really, ultimately, where we see this is that leveraging the information and taking it forward requires an aggressive partnership model, and that's maybe something in the BPO market that is really where it's transforming. And I've tried to net it out with as simple graphics as I could find. I think I maybe achieved that, as it's a transformation from a pure lift and shift outsourcing to a third-party vendor to a partnership model where you're not only providing a low-cost BPO service and you're not only providing an analytics tool, but you're starting with an outcome and you're pairing consultants with BPO resources and software people and analytics expertise and integration specialists to craft this end-to-end solution enabled by analytics that can deliver whatever business outcome you're looking to achieve, whether it's growing revenues or accelerating service or product innovation. So an increasing shift to this partnership model and using one vendor that can act as a partner to deliver BPO value. So lastly, just to quickly net out, BPO is doing really good at what it's really good at. It's delivering cost savings, and it's still a reliable means of standardizing and optimizing process. But that's changing, and it's not going away, but BPO scope is expanding, and it's becoming a strategic imperative. And the best way that vendors are getting there is getting in their ships and using mergers and acquisitions to build those capabilities and have both the operational and strategic side of BPO to bring to bear. And analytics is really underlying all this because analytics holds and unlocks that value in terms of processing data streams created in the context of a BPO engagement to bring forward that value to clients. So just to quickly highlight some of the latest and greatest that we'll be looking at in the next quarter, both in our syndicated vendor reports as well as the IT services benchmark. I'm going to actually jump to the bottom and look at big data analytics, because we talked a lot about it in the context of BPO, and we'll continue to assess this market as we move forward into Q13 and the remainder of the year. Specifically, we'll look at is analytics growth and investment still occurring in the outsourcing domain, or is it shifting to consulting? Where are the hot areas? And we'll look at who the leaders and laggards are in that regard. We'll also look at cloud infrastructure management and assess how that segment of the cloud space is performing relative to other cloud services. And we'll look specifically, as we did a few quarters back, at the ITO business and how an uptick in cloud infrastructure management is impacting legacy ITO businesses. And lastly, as we generally do, we'll dive into a vertical. And we've been looking at a lot about healthcare, and we won't take our eyes off it, but we're going to shift our focus to energy and utilities this quarter and assess who are the leaders and laggards in investing in that space, and where's the growth occurring, and who's capturing it. And are acquisitions the primary catalyst of investment in that vertical, or is there another dominant strategy? So really trying to drill down through our benchmark lens into a vertical where we see a lot of action happening. And with that, that concludes our presentation, and we'll open it up for questions.
Great, thanks, Bryan Ramunas. I kind of feel like I should have introduced myself not as the host, but the cruise director today. So with that, we will move the question and answer portion to the Lido deck. So if anyone has any questions, we've had a couple come through, please send them through now, and I'll present them to the analysts. The first question that came through, guys, is, in your opinion, what is the most daunting challenge the India-centric vendors face to maintaining present BPO growth rates in the long term?
Yeah, so I think the India-centric vendors are an interesting case because they continue to grow and grow and grow. But what were we talking about during this presentation? It's all about the partnership model. And I think about IBM, and I think particularly about the GBS organization in crafting these long-term deals. Having that front-end local presence and that consulting footprint in place is so important to being able to drive to an outcome. So while as we said, the operational side is not going away, the strategic side of BPO is going to grow and grow and grow. And so I think the challenge for the India-centric vendors is building up that front-end client-facing footprint to be able to truly lead an engagement with an outcome, deliver on that outcome, and measure that outcome. And I think as we continued with our discussion of shifts and cruising along, I think acquisitions is the way they get there. And don't have any specific targets in mind, but I think to fill that gap quickly and efficiently, India-centric firms are going to have to look into buying specialized, advisory-heavy capability in this space.
I think a counterpoint to that, though, is that the BPO market has been around for quite a while, and yet we're still hearing case upon case, and interestingly enough, from a number of the Indian-centric players, where companies are just suddenly opening their eyes to the business process outsourcing. They have kind of resisted taking the plunge, and because everybody else is, and the Indian players have been very successful at squeezing out the costs, helping implement better solutions and better processes, really creating some dynamic cost savings, let alone getting into the analytics side of the equation. So, the market definitely has not been saturated from a BPO perspective. There's still a number of firms. The European theater is probably one of the classic areas where there's a lot of still opportunity just for straight, flat-out BPO without even the analytics aspect to it. But in the more developed regions and with companies that have already embraced BPO, then definitely the analytics is going to be a key factor in driving the marketplace.
Okay, thanks. The next question that came through, what is more important in building an analytics-focused BPO portfolio, the analytics technology itself or the people?
So I think there were a lot of time lent to conversations around this at the IBM Big Data event I mentioned in Toronto. But to me, I see it as absolutely the people, and addressing that skills gap So it's not only having the BPO resources that are analytics savvy to deliver these solutions, but it's eventually going to continue to move to where that skills gap grows to the point where it's outsourcing the entire analytics function out to a third party that has the trained and certified expertise to be able to make sense of those tools and assess the data and deliver business insights. So certainly having the tools is important, but I think the bigger challenge and the bigger opportunity is in building and harvesting that base of analytics experts that you can bring to bear in a client engagement. And we see that with the investments vendors are making in partnerships with universities. IBM, multiple initiatives in that area, as well as partnerships with, think of Watson in healthcare, with partnering with Memorial Sloan Kettering to use the expertise of those doctors and hospital nurses and other staff to really explore ways to commercialize it. So I think that talent gap and that resource is really where the differentiation lies.
Ramunas, anything? Nothing?
No, I actually agree. I believe the people aspect is critical, even more so because there is a shortage of skilled analysts and PhDs that can handle analytics data and look at structured and unstructured data. So, you know, the systems integrators, the service providers that have staff that can assist clients will actually be the most successful part of the process here, because they can actually help clients move faster, much more quickly.
Okay, looks like we had one more question so far come through. So again, if anybody has more questions, please send them through now. What will it take for some of the slower growing MNC BPO providers you show on chart 9, go back to chart 9, to evolve from laggards to leaders? So we'll go, you guys keep talking and I'll move it back.
Yeah, so I think, yeah, if we look at this landscape, it's a challenge. So it's a challenge to transform and innovate quickly, and that's clearly easier for some of the indie-centric firms just because of their BPO scale and in terms of revenue is much smaller. But I think it's going to require a top-down change in strategy, and for many of these firms, it's going to be shedding legacy BPO businesses and again, acquiring to add that high-value capability in areas where they aren't. Specifically, we've lent a lot of talk to analytics, but as BPO becomes more tightly aligned around verticals, a lot of these firms have focused traditionally on horizontal processes and delivering value that way by focusing on the pure lift and shift or offshore of finance and accounting or HR. And I think to truly transform, the indie-centric vendors have the leg up in that they're more agile and can invest with greater speed and efficiency. But I think some of these vendors, it's just going to be a matter of taking the steps to move away from the old legacy services and acquiring, whether it's a small firm or whether it's a large BPO firm, whatever is needed to cross that ocean, as we've been talking about throughout the presentation, and really build that next generation portfolio that takes advantage of the best of the legacy model and the emerging model as we discussed.
It looks like we don't have any other questions that have come through, so with that, I will invite you to disembark this lovely journey we just took. Please cruise again with TBR. As promised, here are all the social media links that I mentioned. You can follow both Bryan, who has a lot of really interesting tweets coming out often, so I encourage you to follow him, and as well as Ramunas, who is doing a better job tweeting. He's actually doing too much research, as well as our SlideShare and YouTube links. So we encourage you guys to follow us in social media and join the conversation. There's a couple quick things before you log out. The first one is we are running a short survey to get your feedback on the presentation today. So I would like to hear about what you thought about the content. Was it good? Was it bad? What could we be doing better? The presenters, were they good? Were they bad? What could they be doing better? We are, interested in hearing what you guys have to say. And I'm going to leave the chat function open for a couple minutes in case anyone has any last-minute feedback or questions that you'd like to ask either of the analysts. And so if we do not hear from you this time, please be on the lookout for other webinars we're doing management consulting later in the week, as well as we're doing one of And you have one more coming up, Cloud?
Management consulting coming up.
Management, is there one more that you're doing later in the month?
Not this month. No.
Okay. So keep an eye out for the other invites that are coming out, and we'll talk to you guys all again next quarter when we do the next professional services IT vendor benchmark in the next quarter. So have a great afternoon, everyone, and thanks very much.